Yeah, hello and welcome to another update video about Doge. So here on the Doge chart, we can see that the market obviously recovered quite nicely. Talked about it only yesterday in the video that we had this initial rally, which I'm calling a wave one, which means it's the potential. It's all about likelihood. It's about dynamic probability. So there is no guaranteed, or this is definitely it, right? But there are, there is a case we can make for this to be a wave one to the upside, and here. And then obviously the pullback, or let's call it a sideways correction, was the wave two. It was rather shallow though, which isn't the problem because the B wave did overshoot, so the C wave can be higher than A. So we can basically get this kind of sideways correction, which is not that common in a wave two. It's more common in a wave four, but yeah, that's still sort of what I'm tracking. And it's valid anyway, and we're moving higher. I mean, the alternative, what would be the alternative? The alternative is that this is a corrective structure, like an A, B, C, and we're breaking down, right? That's the alternative here in yellow. We absolutely could get another low. What would be the warning level? So when basically is the white count invalidated as it is, that would be here. That's the break below let's say 9.38 cents. It's the Thursday low. So if we get below, it's a Thursday low. If we get below that level, the idea of an unfolding diagonal pattern here to the upside is invalidated. And we have to say that these diagonals, obviously, as you probably know, they cannot be trusted. They are patterns that cannot be trusted. They change a lot. They consist of corrective subwaves and so on. And, they often just morph, they change in structure and so on. So because of these corrective subwaves, we just always have to be on the side of caution when we're dealing with diagonals. Don't assume that it's going to do that definitely in one go, but it gives us a roadmap. And at the moment, the key level here against which we can focus on higher is that 9.37 cent level. I definitely think the B wave could still be unfolding. I mean, maybe it's in, but this here doesn't convince me yet. So the B wave might still be unfolding. That's A wave up is done. The B wave pullback might still be unfolding. The C wave up could still happen within a third wave. The third wave should get to at least 13 cents. That's the 1.38 extension. And I'm going to watch for that as long as we're holding above the Thursday low. As soon as we get up there to around about 13 cents, I'm going to add a support area for the fourth wave. And then the fifth wave could still happen and should reach one or two more fib levels or higher than the third wave, okay? The fourth wave typically would, the support for the fourth wave is typically the 38.2 retracement of the third wave, maybe the 50% or the 61.8, but we can't add that yet until we get up there, okay? First of all, let's see if we can actually get the move. And a break above the A wave high at around 10.8 cents would suggest that we're on our way in wave C of 3. That's the update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.